Hey Puppy Trades, I want to do a video analysis update on my top buy and hold stocks for September 2021 and beyond. So I'll make sure it's clear that I'm referring to the buy and hold strategy. I'm not telling you as an individual to go out and buy and hold these stocks. So what is the buy and hold? The buy and hold is a passive investment strategy in which an investor buys stocks and holds them for a long period regardless of fluctuations in the market. An investor who uses a buy and hold strategy actively selects investments but has no concern for short-term price movements and technical indicators. Many legendary investors such as Warren Buffett and Jack Bogle praised the buy and hold approach as ideal for individuals seeking healthy long-term returns. So I want to start with the ARK ETF just to kind of show the idea that we really have had a lot of sectors for the past 6 or 7 months not really do anything. From this 216 high, ARK completes an ABC correction and puts in a very important low on May 13th. A lot of stocks in the growth sector, some semiconductor stocks, put in the same, May 13th, May 12th low. I think ARK goes on a wave 1, completes an ABC correction and puts in a wave 2. So the wave 3 target is 154 because that's the 161.8% extension of wave 1. From there, I would expect a shallow wave 4 correction and a wave 5 higher. So I don't believe ARK will go below 110 to 113. It'll go on a wave 3 higher to 154. Have a shallow wave 4 correction and go on a wave 5 higher. Ultimately, I'm looking for ARK to go all the way to 175 by around March to April, around the end of the first quarter of 2022, and not go below 110 to 113. So I think being a growth investor is going to become in vogue again. If we look at Pfizer right now, this is a value stock. From the, this low of March 2020, I think it goes on a wave 1 and a wave 2. If you connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, it looks like we ended a wave 3 at the upper bound of this pitchfork, and we're within a wave 4 consolidation period right now. So what, kind of shorter term investors are going to look for is that this is a, kind of wear you out wave 4. We're going to kill the implied volatility of the options on Pfizer, get these numbers close to 0, and then get ready for this next leg higher to 60. So, could Pfizer just go on a wave 5 higher right now? Sure. Yeah, that's possible that Pfizer just heads to 61 right now. In the more realistic idea, I think bulls, especially options bulls, have to wait for the implied volatility to get crushed. We'll have this sideways wave 4 go on a wave 5 higher. That will be the length of wave 1, place of the wave 4 low. I'm looking for Pfizer to head to 61, 62. I'm looking for implied volatility ranking percentile to get close to 0. The best opportunities for Pfizer as an options trader have come when implied volatility is close to 0 at this low and around this bull flag breakout. Pfizer was showing up on the bar chart, straddle, and strangle screener. If we look at the larger degree picture, right, you don't want to bury the lead. This is a wave 1 and a wave 2 for Pfizer. This is a multi-year base breakout for Pfizer. And as a wave theorist, you don't really care that we formed a wick. That doesn't really matter. We broke this wave 1 high. We've confirmed this is 20 years of institutional accumulation. We've also confirmed that from the 2018 high that this is 2.5 years of institutional accumulation. So if you take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2, gorgeous pitchfork right now. We're going to go from the lower bound of the pitchfork to the median. Ultimately, the next target range is 60 to 62 for wave 3. Well, a shallow wave 4 correction, go on a wave 5 higher. In the longer term cycles, I'm looking for Pfizer to head into the 90s and pay a dividend along the way. So it's a dividend aristocrat, it's a monster, and I really like it. So it's going to continue to break above this wave 1 high, continue to confirm 20 years as well as 2.5 years of institutional accumulation, and go pay a dividend along the way as it heads to the median of this pitchfork. So Pfizer's looking good. In the short term, I want to see IV cool down before I get back into calls. If we look at Sanofi Aventis, this is a French pharmaceutical giant. I've been using this in these videos to kind of just be holistic evidence that it's the whole pharmaceutical sector. And that's hard for a lot of people to wrap their brains around because they think all these companies are competing. As a technical trader, you see stocks in the same sector as being members of the same exchange traded funds, right? So if I'm an AMD bull, I'm rooting for NVIDIA, right? I don't see NVIDIA as my competition. I see it as my cousin, right? And I want it to succeed because the exchange traded funds that NVIDIA are in will go up. While advanced micro devices is in them too, right? So the rising tide is going to lift all the boats. This is a wave 1 and a wave 2. And then a really nice pitchfork forms for Sanofi Aventis, ticker symbol SNY. And then the French pharmaceutical giant forms another wave 1 and another wave 2. I believe it will go the length of wave 1, place of the wave 2 low for a wave 3 target of 70. Then have a shallow wave 4 correction that will conservatively retest the wave 1 high, go on a wave 5 higher, all the way to the low 90s. So I'm expecting Sanofi Aventis has more upside to 90 in the larger degree. It's a lot of holistic evidence that this pharmaceutical sector will do well. Sanofi Aventis, the wider tighter kind of stop is 37. So not the best setup, from a risk reward standpoint, but I think it's a lot of evidence that the pharmaceutical sector is looking very good. AstraZeneca, another one, right? This is a global pharmaceutical breakout. This is a wave 1, ABC correction wave 2. I missed AstraZeneca at the 61.8% retracement. I'm still kicking myself for that, but the length of wave 1, place of the wave 2 low, will take AZN all the way to 75 for a conservative wave 3. We'll have a shallow wave 4, go on a wave 5 higher. So AstraZeneca, I'm also expecting to head into the 90s. I don't think it's going to go below 46, to be honest, ever. It's within a wave 3, 4, and 5 to the upside. Right now, it's going to break above this wave 1 high. Confirmed, yeah, that's over a year of institutional accumulation. And for Pfizer and AstraZeneca, I mean, these are kind of two that from a fundamental perspective, we've kind of known about a lot of the stuff, for these stocks, right? So, when people say, oh, all that good news is priced in, yeah, it is priced in. That's why large institutions have been accumulating the crap out of Pfizer and AstraZeneca this entire time. Merck, I really like. I think it's going to continue to pay, a really nice dividend. And I think this is a 1, 2, 3, 4, 5 large degree wave 1. This is around the same time Pfizer puts in that exact same high. It completes an A, B, C correction, puts in a 2009 low with Pfizer, and then another wave 1 and another wave 2. So I think Merck is going to hold above 65. It will go the length of wave 1, place of the wave 2 low, head to 138 for a wave 3 target in the longer term cycles, head to the median of this pitchfork, pay a dividend along the way, hold above 65. So I think Pfizer and Merck, they're both going to continue to break out above these, wave 1 highs they formed around 2000, confirm 20 years of institutional accumulation, and hopefully continue to pay great dividends along the way. So I like Pfizer, I like Merck. Camping World, I talked about coming into this year. It's honestly more of a swing right now, but it forms a wave 1, puts in a wave 2 low. So the length of wave 1, place of the wave 2 low, gives a larger degree wave 3 target of 61. And then I believe it forms another wave 1 and another wave 2. So the 61.8% retracement of this, small wave 1 is 32. The 50% retracement is 35, which is where wave 2 ends. So if Camping World is above 32, with 35 being a little tighter stop, I think it's going to go on a wave 3 of wave 3 higher, just within the shorter cycle. The next wave 3 target is 61. I'll be looking for a shallow wave 4 correction and a wave 5 higher. Interesting with Camping World, 0% implied volatility ranking percentile. As we switch quarters, most likely, yeah, that's a lot of institutional accumulation that we've been seeing from Camping World. And as a shareholder, you don't care about theta, crushing you, right? So there's no way on earth that someone could have really held options throughout this entire time, to be honest, right? Because implied volatility spikes, right? And then we just crush option premiums. But as a shareholder, you're not affected by that. You can get paid dividends. So, there's advantages to, all the strategies. And if you look at the length of wave 1, place of the wave 2 low, 61's a conservative wave 3 target. We'll have a shallow wave 4 correction, go on a wave 5 higher. I'm holding Camping World, looking for it to go all the way to 80. So it's looking good. Credit Suisse, I really like. This is a wave 1 and then an ABC expanded flat correction from this 2007 high. A couple of these regional banks, they do the same exact high from 2007, and then I think we put in a generational wave 2 low for Credit Suisse in March of 2020 and begun a wave 3 higher. So by definition, wave 3 has to break to a new all-time high for Credit Suisse above 79. I think it's heading into the 70s in the longer term cycles. On the shorter degree, though, it's starting to look interesting. So I think that Credit Suisse is a 1, 2, 3, 4, 5 waves impulse. That's completing a large wave 1. And then if you measure the Fibonacci retracements for this wave 1, it looks like Credit Suisse ended a wave 2 right around the 61.8% retracement. So if we want to be a little tighter, we can say, I don't think Credit Suisse will go below 8.28, that 78.6% retracement. I think it ended wave 2 at the 61.8% retracement. It's within a wave 3, 4, and 5 to the upside right now. I'm looking for Credit Suisse to go into the 20s in 2022. It's looking good. And I love this regional bank sector. It's kind of a value play. So here are some more value stocks. The uranium stocks I thought were a huge kind of thing that a lot of people missed. A large breakout for uranium stocks this week. That's got big implications for oil bulls and airline bulls. We'll talk about that in a second, but on the bigger term picture, Cameco Corp forms a wave 1, has an A, B, C correction, right? That same 2007 high we just talked about for Credit Suisse. A lot of value stocks put in that same high, and I think they also put in a generational wave 2 low in 2020. So the length of wave 1, place of the wave 2 low means that Cameco Corp CCJ uranium stock will ultimately go to 60 for a conservative wave 3 target. market. And we also talked about how if you turn on the Ichimoku cloud, it's kind of helping to support the idea that, yeah, it's not just wave theory. This is a, a different change of pace, for a lot of these value stocks. If we turn on the silver chart, the 20-year chart, it would look identical to this, a huge Ichimoku cloud breakout. So Kamiko Corp looking good. In the shorter term, I want to talk about the uranium ETF, URA. We'll talk about energy fuels too. But in the shorter term, this is the entire ETF full of uranium stocks. It broke out above this wave 3 high of 23. So the full count for URA, this is a uranium ETF, is that this is a wave 1 and a wave 2, a wave 3 and a wave 4 that ended around the 50% retracement. So in LA wave theory, wave 5 will either be the length of wave 1 placed at the wave 4 low, or the length of wave 3 placed at the wave 4 low. We've already passed what would have been the length of wave 1 placed at the wave 4 low. I believe that the wave 5 for URA will be the length of wave 3 placed at the wave 4 low. And this is going to take URA, all these uranium stocks, all the way up to 30. That's got big implications. If you're an oil bull, if you're an airline bull, we'll talk about that in a second. But URA, I believe, will hold above 17.23, go on a wave 5 higher that won't end until it reaches 30. And I think that a lot of uranium stocks right now, they're being leading indicators for the oil sector, the airline sector, the energy sector is going to have a breakout as well. Here is U. I talked about this, during the July massacre, right? But this is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction, I believe, ended wave 2 around the 50% retracement, where the length of wave A placed at the wave B high ended wave C. So I bought U on this date and this date. Around July, the length of wave 1 in place of the wave 2 low will take energy fuels to 11. We'll have a shallow wave 4 correction that will conservatively retest the wave 1 high. Then I'm looking for a wave 5 higher that will take U on another leg higher, ultimately to 14 to 15 within this cycle from the March 2020 low. So I think in the short term, energy fuels will hold above 4.32, go the length of wave 1 place of the wave 2 low. Head to 11 for that next wave 3 target, have a shallow wave 4 correction, go on a wave 5 higher. So that's energy fuels. Here is Trenseco Corp, TSE. On the bigger term picture, I think it looks something like this, where this is a 1, 2, 3, 4, 5 large degree wave 1, and then we have an ABC correction we put in a wave 2 low. So Trenseco Corp, TSE, this is the stock that is engaged in rubber production, right? So it's everywhere in the market. The material side of the market, the value side of the market, that's really a big opportunity place. And if we look at Trenseco Corp right now, from this low that we put in March, I believe we form a 1, 2, 3, 4, 5 waves impulse that completes a wave 1. And then what I said was that we were going to use the Ichimoku cloud on the weekly for kind of the risk management. And I think right now we're getting that cloud bounce right now. We're going to react really impulsively, off this weekly Ichimoku cloud. I don't think TSE, honestly will go below 46. I don't think it's going to break below this cloud. I think it's going to go on a huge rally higher. The length of wave 1 placed at the wave 2 low will take Trenseco Corp all the way to 106, and that's just a conservative wave 3 target. We'll have a shallow wave 4, go on a wave 5 higher. So yeah, the idea that this company makes rubber, right? This isn't Apple, this isn't Zoom, right? This isn't some sexy growth stock. This is the company that makes rubber, and it looks like it's almost postured to triple within this cycle, from the March 2020 low. That's gonna say a lot about what inflation might look like. Here's JetBlue. This is on the bigger term degree, this idea that the value side of the market, the industrial side of the market, the, quote unquote inflation plays are looking extremely good. For JetBlue, this is a wave 1 and an ABC correction that put in a wave 2 low. If we take the Fibonacci retracements of this entire rally from March 2009, to this all-time high for wave 1, it looks like we ended wave 2 at exactly the 78.6% retracement. So from that wave 2 low, we began what most likely is a generational wave 3 that's going to be a monster new bullish cycle that's going to last multiple years for this airline sector. If we zoom in right now for JetBlue, then we have a little bit of work to do. We got to figure out what is this from the low that we put in March of 2020. The aggressive view right now is that this is a wave 1 and a wave 2. And this is another wave 1 and another wave 2 that we're ending at the 61.8% retracement. So JetBlue should hold the 78.6% retracement of about 12.34, go on another leg higher that will be very conservatively the length of wave 1, place of the wave 2 low. If JetBlue goes past 23, then we're going to know that this is very likely a nest. What I'm showing right now is the more conservative view, but is it really the more accurate view? Probably not. We'll talk about that in a second. But JetBlue, the conservative view right now for JetBlue is that this is a 1, 2, 3 a wave 4 that ended around this low that we put in March, and we're going to go on a wave 5 higher that will be at least the length of wave 1 placed at the wave 4 low. This is the conservative view for JetBlue, is that it's going to go 1, 2, 3, 4, 5 waves. The length of wave 1 placed at the wave 4 low will take JetBlue to 23. Now, if JetBlue goes above 23, if it passes 23, then we're going to really have a lot of evidence that this isn't a wave 5 in progress. It's another wave 1 and another wave 2 breakout. So it's a wave 3 of a wave 3 that we could be looking at for JetBlue. Either way, in the short term, I'm looking for at least another high for JetBlue, but I just want to talk about the larger degree picture for this airline, that this is, a multi-decade long breakout. In my opinion, it's going to take a lot of time, but eventually we're going to look back, 4, 5, 6 years from now, realize that this was a generational wave too low for a lot of industrial stocks, a lot of oil stocks, a lot of the transportation sector. For Exxon Mobil, this all-time rally is a 1, 2, 3, 4, 5 waves impulse. It puts in a large degree wave 1. This is an oil, conglomerate, and this is an ABC correction. We put in a wave too low between the 61.8 and the 78.6% retracement. This looks like yet another generational wave too low that we put in, around 30 for a dividend aristocrat, oil paying giant. And most likely this is a wave 2. So this whole rally, this, decades long rally should get replicated in price, at least 2 more times for wave 3, 4, and 5 to the upside. So, potentially a huge low that we put in the uranium stocks, the value stocks like the pharmaceutical sector, some of these regional banks, they're all supporting this idea that this is a multi-decade long rally that we are beginning from that March 2020 low in the value sector. So what does that mean for gold and silver? If you look at gold and silver right now, this is GLD. I think this is a wave 1, and we complete a WXY, what's called a 333 correction. It's basically the same thing as an ABC correction. The only really fundamental difference is that this length of wave W placed at this wave X high is exactly where wave Y should end, right? We shouldn't go much further than the length of wave W placed at the wave X high. That's really the only tangible difference. If you look, it ends at the 61.8% retracement for gold, GLD. So I think right now that GLD won't go below 157. It will go the length of wave 1, placed at the wave 2 low, and go on a rally to 215. Now from this low, I think it formed another wave 1 and another wave 2. It could be breaking out right now into wave 3 of wave 3 to the upside. So if it's above 157, the next target is 215. Then what happens? We have a shallow wave 4 correction that conservatively retests the wave 1 high before we go on a wave 4 and 5 higher to 250, right? So the idea that some rocks like gold and silver are going to go up 40%, they should scare you. If we looked at platinum futures right now, platinum cash, we can go see, right? This is everywhere in the precious metal sector that we put in a ridiculous wave 2 low in the larger degree, and that it looks something like this for platinum, it looks something like this for silver, where that's wave 1, that's wave 2, and now we're exploding into waves 3, 4, and 5 to the upside. So for platinum, it's very similar to gold. It's very similar to silver, right? It's similar to a lot of things. That's wave 1, that's wave 2. We're beginning wave 3 of wave 3 right now. Generational opportunity for the precious metals, right? They were never going to make this easy, right? These are rocks, right? If you think you're going to make 100% return on rocks, yeah, they're going to make this difficult. That's why I've always talked about gold and silver, the precious metals, as long-term ideas. So here is silver SLV. It goes on a wave 1, has an A, B, C correction, puts in a wave 2 low. The length of wave 1 placed at the wave 2 low is going to take silver SLV all the way to 50. Doesn't this look just like, that chart of Kamiko Corp we just looked at? If you look at the Ichimoku cloud, it does look kind of similar, where it's, a decade-long breakout, a decade-long trend change, and this is potentially a monster development right now. This is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low is going to take SLV to 50. So this, ETF, that's basically just a play on a rock, is going to explode. It's been being accumulated for the past 20 years. We have a wave 1 and a wave 2 forming. So in the very short term, if SLV is above 20, it's within a wave 3 of wave 3 right now. A little wider, the monthly trend spotter, I think could be pretty useful. That this is, kind of the next level is 18.31. We want to hold on the monthly chart. This is kind of being an objective way of saying, yeah, this is a new bullish cycle for silver in the longer term. It fits in with the Ichimoku cloud view. And if we look at the shorter degree view for silver, I know everyone, hates silver. We're almost close to 0% implied volatility ranking percentile. I think what very likely happened is that this is a wave one, right? This is a wave two. Everyone hates this. And then what this could be right now is another wave one and another wave two, and silver's exploding. So if it's above 18.31, that's going to invalidate the idea. 20 is the short-term invalidation. I don't think we're going to go below either. I think we're going to go on a wave three higher. If it's above 18.31, then, you know, the idea that someone's going to make money investing in rocks and double their money, yeah, that of course the institutions were going to be very interested in that. That's why they've been accumulating it this entire time, right? Is there any new bullish fundamentals about silver or gold that we're going to learn? Probably not. Okay, probably not. I think it is priced in, and in this case, priced in means institutions are accumulating it. So if we look at First Majestic Silver right now, I like this a lot. I think it's a wave one and a wave two, another wave one and another wave two, and then another wave one and another wave two. So I had, you know, this being an explosive rally with Nokia in January, and then it does kind of have this explosive rally, and, you know, they tell us what the Redditors did this. Well, what was really important about this rally was that we broke above the 2016 high. From a wave theory perspective, we confirmed, yeah, that's 5 or 6 years of institutional basing on a silver miner. I think this is another wave one and another wave two. This is another wave one and another wave two. We're going to hold above 9.33 and explode into wave three higher. The next, you know, wave three target is 28. I think that's going to be very conservative in the longer term cycles, but even then, right, that's looking pretty good. The next minimum target is around 30. We're going to hold above 9.33 for AG, start exploding higher. If we look at, you know, a lot of these silver miner stocks, Pan American Silver is more of a large cap name where it forms a wave one and it puts in this high in 2008, has an ABC correction and puts in a wave two. I believe right now it's exploding into a wave three of wave three of wave three. It's going on a huge rally from this low that it puts in 2016. This is the wave one and a wave two. I think it's within a wave three of wave three right now. It's going to break above this high in March of 2008. Most likely it's going to explode above that, you know, high in 2008 of around 44, right? Confirmed. Yeah, this is all institutional accumulation for the past 15 years. And then it's going to be a new super long-term, you know, bullish cycle. I love Pan American Silver. I think right now this is a 1, 2, 3 wave four. Wave four is retesting the wave one high. We're going to go on a wave five higher right now for Pan American Silver. I think First Majestic Silver, AG, is going to be an outperformer. It's probably the better pick. It will hold above 9.33. But First Majestic Silver, definitely, at least in the evidence category, that this has a lot of upside. Perhaps as a, you know, more large cap exposure play, it would be very good. BTG Gold Corp. This is not the cryptocurrency BTG. This is the ticker symbol BTG Gold Corp, a small cap gold miner, wave one and wave two, another wave one and another wave two, another wave one and another wave two, ending at the 61.8 to 78.6% retracement. It's going to explode into wave three of wave three of wave three. The length of wave one placed at the way too low. It means the wave three target is 9.11, right? That's almost triple the current price, and that would just be wave three. We have a shallow wave four that retests the wave one high, and that would take a wave five to 12, right? 12.45 for a pretty standard wave five target. I think in the shorter term, bulls don't want to see the 78.6% retracement of 3.31 go. And most likely, this is a 1, 2, 1, 2, 1, 2, wave three of wave three of wave three in progress. The next, you know, wave three target conservatively is going to be 9.11. We'll have a shallow wave four correction, go on a wave five higher, eventually to 12. If BTG is above 3.31, I expect that we're going to go on a rally to 9.11, have a shallow wave 4 correction, and go on a wave 5 higher to 12. So all those are in the longer term cycles. I've always talked about gold and silver as a long-term idea. I knew they were going to make it tough, right? No one was ever going to make money, you know, buying monthly options on gold and silver. So if we look at Fastly right now, we're going to talk about some growth stocks. I hope everyone's awake, right? I always talk about the growth stocks towards the end. Right, I make you sleep through the value stocks, but this is Fastly. It forms a 1, 2, 3, 4, 5 large degree wave 1, an ABC correction puts in a large degree wave 2 between the 78.6 and the 61.8% retracement for Fastly. So, you know, we can talk all day about how, you know, TWLO and Okta and, you know, all these software stocks, right? Salesforce is breaking out to a new all-time high, you know, after several months of basing, over a year of basing. The software sector looks damn good right now. We can talk about TWLO, Okta, Salesforce, even the entire cloud computing ETF, CLOU, until I'm blue in the face. And I probably will do that at some point this week. But Fastly, I think this is a gorgeous one. 1, 2, 3, 4, 5, large degree wave 1, A, B, C correction, large degree wave 2, ending at the 78.6% retracement. The length of wave 1 placed at the wave 2 low, and the longer term cycles is going to take Fastly all the way to 159, right? Then we'll have a shallow wave 4 correction and go on a wave 5 higher. This could be an Nvidia, this could be a Bitcoin, this could be a Microsoft, just realistically. And no, that doesn't mean that, you know, people should be reckless. It doesn't mean that anyone should buy Fastly. It just means that I think it's a really good stock. This is a 1, 2, 3, 4, 5, large degree wave 1. This is an ABC correction, large degree wave 2, ending at the 78.6% retracement. I think it's going to explode into a wave 3 higher, and that's a conservative wave 3 target of 159. We have a shallow wave 4 correction and go on a wave 5 higher. I mean, Fastly, this is a really pretty one, you know, for the growth sector, for a lot of stocks right now. Another stock I really like in the growth sector, especially in the software sector, is Zoom. I think right now this is a 1, 2, 3, 4, 5 large degree wave 1 for Zoom. We have an ABC correction. We put in a large degree wave 2. We have a lot of software stocks that are exploding right now. TWLO and Okta, right? They look like in the next couple of quarters, they're going to be blowing up to the upside. Zoom is not going to be left out of the equation. We started this video talking about ARK doing really well. Zoom is in ARK. Let's just go over the levels right now. This is a wave 1, right? The 61.8% retracement of wave 1 is 262. Okay, so if Zoom is above 262, then wave 2 is already in, and it's going to go explode into a wave 3, 4, and 5 to the upside. So the minimum wave 3 target, if Zoom is above 262, is the length of wave 1 placed at the wave 2 low. That means Zoom's going to go hit 800. Okay, and if Zoom hits 800, that's just going to be the wave 3 minimum target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher to literally 1,111. Okay, yeah, that sounds ridiculous, but I think it's ridiculous to short Zoom right now. I think that this is a 61.8% retracement that's put in a wave 2. We're going to explode into waves 3, 4, and 5 to the upside. I think that Zoom's going to have a lot of stock splits in its future. I think that Zoom and Fastly are going to be ones that we look at in looking back. And Zoom and Fastly, we're going to be very similar to, you know, a lot of the e-cash stocks in 2016 and 2017, and they're not going to be easy holds, but they might be worth it. This is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low says the next minimum wave 3 target is 800. We'll have a shallow wave 4 correction, go on a wave 5 higher. That's all going to be valid if we're above 262. Then wave 2 is already in. And when we talk about TWLO, Okta, Cloudflare, a lot of these stocks that are exploding in the software sector, there's no way that they're all going to break out for the next 2 quarters, and Zoom's going to be left in the dust, right? They're all in the same ETFs. So this is Beyond Meat. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. This could be over 2 years of institutional accumulation. This could be an IPO base, and that this stock very early in its life cycle is going to explode, okay? It could be the case right now that there is not a wave 3 on this chart. That's not a wave 3. That's not a wave 3, okay? This is a wave 1 and a wave 2. This is another wave 1 and another wave 2 that ended between the 61.8 and 78.6% retracement of wave 1. So if Beyond Meat is above 99, that's not very far down to the downside, okay? The wider invalidation will be the 78.6% retracement of 85. I don't think we're going to talk about 85. I don't think we're going to go below 99. I think this is wave 1 and wave 2. Beyond Meat is going to explode into wave 3 of wave 3. And that this is the length of wave 1 placed at the wave 2 low, meaning the next conservative wave 3 target is literally 273. Okay, that would just be where wave 3 ends. We have a shallow wave 4 correction. We go on a wave 5 higher. So I came into this year, I talked about Beyond Meat when it was around 125. It exploded to 220. I tweeted in all caps, you know, take profits, get out of that. That's a lot. We're probably going to retrace. And of course we did. And now I think right now this could be getting ready for the big one, where this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low is going to be a wave 3 target of 273. That's going to mean that we're above this all-time high, and that this is a 2.5-year IPO base, an explosive play potentially for Beyond Meat. If it's above 99 with 85 being a wider invalidation, it's got a lot of upside. So I like Beyond Meat. I like Fastly. I like Zoom. You know, a lot of these stocks, let's talk about NetEase right now. Should I talk about Alibaba first? I should probably talk about Alibaba first. So we'll talk about Alibaba. We'll talk about NetEase. Very similar idea, very similar charts. Even if you look at these dates for Alibaba and for NetEase, they're kind of in that software sector. We'll talk about the Chinese electric vehicle stocks in a second. This is a wave one and a wave two. This is another wave one and another wave two. Now, this is more clearly a wave two for NetEase. But these are the same ideas right now for NetEase and for Alibaba. That this is the wave one and a wave two, and this is the wave one and this is the wave two. So we're within or entering wave three of wave three right now. So we're at exactly the 78.6% retracement of this big rally. The invalidation level is very clear. If we're above 130, then this is wave one, wave two, and wave three in progress. If we're below 130, then I'm wrong, okay? But this is a wave one and wave two. This is another wave one and another wave two, right? The Amazon of China was never going to be an easy stock to buy and hold, okay? The length of wave one placed at the wave two low will take Alibaba to 342. Okay, that's going to be an extremely conservative wave three target. We'd have a shallow wave four correction that will conservatively retest the wave one high and go on a wave five higher. I'm still looking for Alibaba in the longer term cycles to head to 500. Okay, and I think right now it's going to hold above 130. It's going to begin a bullish cycle to the upside. And when we talk about stocks like the growth stocks having very good fourth quarters, having very good first quarters of 2022, I think the Chinese stocks are going to be within that group. So we'll talk about more in the Chinese sector right now. Here's NetEase, just the exact same idea. I might have tweeted about NetEase at a generational decade low, but anyway, this is a wave one and a wave two for NetEase, and I think that it forms another 1, 2, 3, 4, 5 wave one and puts in wave two between the 50% and the 61.8% retracement. So a pretty tight stop would be the 61.8% retracement of 74, at least from where I tweeted about NetEase. That would have been a tight stop. The 78.6% retracement is the invalidation level. That sounds crazy right now. I tweeted about NetEase when it was at 78, so that wasn't such a crazy invalidation then, but I think for right now, if it's above the 61.8% retracement, then just like Alibaba, that's wave one and wave two. This is another wave one and another wave two. Wave three of wave three is going to take NetEase on a conservative rally to 175. We'll have a shallow wave four correction and go on a wave five higher. The 61.8% retracement of 74, we'll call that the stop. I'll continue to use the 78.6% retracement of the invalidation level. That's 57. I know that's far away now. It wasn't far away when I talked about NetEase. I think we're going to go on a wave three of wave three higher. NetEase and Alibaba looking really good. Wayfair is another one in this sector, right? More Chinese stocks. They're still looking very good. Let's look at this long-term view of Wayfair. I love pointing out that, yeah, right before they had that huge explosive rally, they made sure to get everyone out, right? They always scare you out before the biggest, rallies. And if we look at Wayfair right now, this is a wave one and a wave two low on the all-time cycles. I think this is a wave three that we formed on the weekly chart, and we put in wave four at the 38.2% retracement. So right now, if Wayfair is above 221, it's within a wave five higher right now, pretty conservatively. Yes, this could be counted as another wave one and another wave two for Wayfair, and we're exploding into wave three of wave three right now. Either way, we'd be looking at a pretty similar idea. The length of this rally placed at this low is the next target, which is around 552. Now, if it's only a wave three, that's just the wave three target. We have a shallow wave four correction. We go on a wave five higher right now. But even if it's a wave five, we should still see the length of this rally get replicated for wave five. So that's wave three. This is wave four. Then we end at the 38.2% retracement. I think we begin wave five higher right now. This is wave one of wave five. That's wave two of wave five. We're going to enter wave three, four, and five of wave five. Ultimately, I'm expecting Wayfair will go all the way to 552. We talk about, Netflix having almost a 13, 14-month breakout. Salesforce almost having a 13, 14-month breakout. We're seeing software start to explode. We'll talk about some Chinese electric vehicle stocks in a second. But I think Chinese stocks, we're being told to stay away from them, and we were being told to stay away from crypto 2 months ago. I think it's going to be a very similar result, to be quite honest. That's Wayfair. Huya, definitely not doing well. Huya's definitely not doing well. I took a half position in Huya. Generally, for growth stocks, I will take half the position size that I will for value stocks. For Huya, I think there's only one way to count it, that this is a wave one we put in the 2018 high. This is an A, B, C correction. I think it more accurately could be called a WXY correction, what we just talked about with gold, where it looks something like this. This is wave W. We have an A, B, C correction to put in wave X, and then this is wave Y that we're putting in right now. So I'll definitely say that Huya has not gone the way that I hoped, but that's why I took a half position size. I'm still very bullish on the whole Chinese sector, and I think there's almost a 0% chance that if Alibaba and NetEase and a lot of these Chinese stocks that I expect to do extremely well are doing well, that Huya will get left in the dust. So I take a holistic approach, and if we look at Huya right now, from this all-time high is most likely a corrective structure, in my opinion. What we need is that Huya will turn around. I think if we want to be more objective, we can turn on the Ichimoku cloud, look at the daily chart, and say maybe the next time to really take a shot at Huya is going to be when it finally breaks out of the daily chart. Ichimoku cloud gets above this cloud level right here, about 13, 14, 15. Starts breaking out to the upside, but Huya, it hasn't gone the way I thought. But if we look at a lot of these Chinese stocks, the whole Chinese sector is going to turn around. There's almost a 0% chance, in my opinion, that Huya is going to get left in the dust. I think it's another Chinese internet stock. It's forming a big base from the IPO. If it gets above this wave one high in the future, that's going to mean that this was 2.5, 3 years of institutional accumulation, and that Huya could be a future Alibaba. It could be a future NetEase. I think it's going to go a lot higher with them. So Huya hasn't gone the way I thought. I'm still holding it. I took a half position size. Generally for growth stocks, I'll take half the position size that I will for value stocks to compensate for that higher beta, that higher risk. So if we look at First Solar right now, a very pretty chart for First Solar. Just want to talk about the bigger picture. We're going to transition into the clean energy stocks right now. For First Solar, this is a wave one and a wave two on the all-time chart from 2012. Wave one and wave two. And then another wave one and another wave two. We break, we close, we back test and retest successfully these wave one highs. So we've confirmed right now, this is a wave three of a wave three in progress. Now we're going to talk about the shorter term view of First Solar. I think that this is another wave one and another wave two that we form from the March 2020 low. We go on a wave one and a wave two. We form another wave one and another wave two at the 78.6% retracement. Now note, this 125 high, one is the same high that Apple forms. I'm not going to correlate Apple and First Solar, but it is the same high that Next Area Energy, the largest clean energy provider in the world, forms. And if we look right now, Next Area Energy is about $1 from breaking the exact same January 25th high that Tesla, the solar ETF TAN, and First Solar all formed together. And I think one by one, we're going to see these clean energy stocks break out above the January high. For First Solar, that's going to be wave one, wave two, wave three minimum will take First Solar to 120. We'll have a shallow wave four correction and go on a wave five higher. Ultimately, that's going to take First Solar all the way to 165. I think First Solar is a lot of holistic evidence. The clean energy sector is looking extremely good, not only in the short term, but in the long term. Very excited for this sector. We'll be covering this very closely. NEO, right? Just look at NEO right now from the 2019 high, right? Everyone feels like an idiot. You break below the IPO base, right? I think this is Huya. I think this is Lordstown Motors. I think this is Ebon right now, to be honest. We've broken below the wave one high, right? All the gurus like me, we're getting made fun of, and I think that this is really a large base. This is a ton of institutional accumulation that NEO is going to be, turning around, and it does break, and turn around. The full count for NEO right now is that this is another wave one and another wave two from this all-time low. And so we're within a massive wave three high right now. I've said in my previous videos, and I'll continue to say, I really like that short-term view of NEO the best, that this is a wave one from this May 13th low, right? Surprise, surprise, a May 13th low. It's basically every growth stock that forms this exact same May 13th low. Go look at the chart of advanced market devices to get a sneak peek of what's about to happen to them. But this is a wave one and an ABC correction put in a wave two low between the 61.8 and the 78.6% retracement. The length of wave one placed at the wave two low gives a conservative wave three target, but the textbook wave three target is the 161.8% extension, which is 70. Then we have a shallow wave four. We go on a wave five higher. So NEO, it's a lot of evidence that not just the clean energy stocks, but also the Chinese stocks are going to start to pick up the pace. This is a wave one and a wave two. We're going to hold above 30 and go on a wave three higher to 70, have a shallow wave four correction, and ultimately I'm looking for a wave five higher to take NEO into the 90s. I think in the fourth quarter, NEO will hold above 30 and go reach 70 by Christmas, by January 20th, that quad witching date. XPEV and Li Auto, right? More Chinese electric vehicle stocks. Right? If all these Chinese electric vehicle stocks are doing well, Alibaba, NetEase, they're probably not going to be crashing. Anyway, not even really correlating those, but they are Chinese stocks. We're being told to stay away from them. And I think it's very similar to Bitcoin and Ethereum a couple months ago. FinTwit's telling you to stay away. The large institutions are loading the crap up of these stocks. So this is XPEV right now. Wave 1, ABC correction wave 2. The length of wave 1 placed at the wave 2 low gives a minimum wave 3 target of 80. We're going to break above this all-time high for XPEV. Confirm, yeah, that's all a huge IPO base. If we want to be a little tighter, we can say that's another wave 1 and another wave 2. So XPEV is entering wave 3 of wave 3 right now on the shorter degree. My next target for XPEV is 80. We'll have a shallow wave 4 correction, kind of form that bull flag, that cup and handle look, and then go on a wave 5 higher. This stock looks extremely bullish in the longer term cycles in XPEV and Li Auto. Like I said, you can turn on the Ichimoku cloud, and it's another, Ichimoku cloud breakout. We want to see these clouds hold. We probably want to see that XPEV will hold above, 30, 31, enter wave 3 of wave 3, and, XPEV with NEO, with Li Auto, I expect to do very well in the fourth quarter. I think the Chinese stocks as a whole are going to do very well in the fourth quarter, as well as the first quarter of 2022. This is Li Auto. This is another one. It forms a wave 1, has an ABC correction, puts in a wave 2 low. Then it has another wave 1 and another wave 2. It looks identical to XPEV, and it's within a wave 3 of wave 3 right now. The length of wave 1 placed at the wave 2 low. We'll take Li Auto all the way to about 49.50. Well, you have, that sideways wave 4, go on a wave 5 higher. It's another one we can turn on the Ichimoku cloud, see that this is a big old base breakout from the IPO low. It's looking pretty good. I think that this is going to go break above 50, confirm that, yeah, this is all, a year of institutional accumulation for stocks that just recently IPO'd. And when you just recently have an IPO stock, that means that the risk reward is a lot higher. So the risk reward ratio is always going to be higher the closer you are to the IPO date, because you're closer to a stock's life cycle beginning. That means that if Li Auto goes 1, 2, 3, 4, 5 waves to the upside, then those 5 waves are all going to become part of a large degree wave 1. Okay, so we're really early in Li Auto and XPEV's life cycle, and that's why when they break above these IPO highs, we could be looking at larger return potential than really anywhere else in the market. If we look at Acromoda right now, American EV, I think it's a very similar story, that this is a 1, 2, 3, 4, 5 waves impulse. We're going to see the EV sector have a monster fourth quarter. We have an ABC correction. We put in a wave 2 at exactly the 78.6% retracement. Then I think we form another wave 1 and another wave 2. So Acromoda actually could be played pretty tight, that if it's above 7.32, it's within a wave 3 of wave 3 right now. It's going to go the length of wave 1, placed at the wave 2 low, head all the way to 43, have a shallow wave 4 correction, go on a wave 5 higher. It sounds ridiculous until it happens, but the length of wave 1, placed at the wave 2 low, means that 43 is going to be a conservative wave 3 target. We have a shallow wave 4 correction, go on a wave 5 higher. Definitely not going to be an easy one, but if Acromoda is above 7.32, it's another one that could be, a huge winner. Not only in the fourth quarter, not only in the first quarter, but for a long time to come. Polar Power, another small cap, clean energy stock that I like. It's another one I took a half position in, but it's looking good that this is a 1, 2, 3, 4, 5 large degree wave 1 and ABC correction put in a wave 2 at the 78.6% retracement. I think we're turning around right now. The length of wave 1 places the wave 2 low. We'll take Polar Power all the way to 36. We'll have a shallow wave 4 correction, go on a wave 5 higher. Really the only, this isn't even an invalidation level. If it's above 1.43, right, 50, almost 75, 80% to the downside is the invalidation level. So for this one, really the only way to manage risk is going to be with position size. So that's what I did. I took a half position in Polar Power. Going to continue to hold it. The length of wave 1 placed at the wave 2 low. We'll take Polar Power all the way to 36. We'll have a shallow wave 4 correction, go on a wave 5 higher. So I've got a lot of ambitions for Polar Power. And I think if you look at First Solar, you look at the holistic clean energy sector, this is a sector that's going to do very well. And if we look at QuantumScape right now, I haven't talked about this one, but this is all over the clean energy side of the market. That this, especially in these small caps, EV was 1, 2, 3, 4, 5, large degree wave 1. A, B, C correction puts in a large degree wave 2. If QuantumScape is above about 11.80, 11.25, I think it's within a wave 3 right now. The length of wave 1 placed at the wave 2 low will take QuantumScape all the way to 142. Right, and that sounds ridiculous, and that doesn't even really need to be hit for this to be a successful trade. But if we look at QuantumScape right now, I think it will hold above 11.25. And if it's not a tradable setup, it is a lot of evidence, just holistically, that the small cap clean energy side of the market is going to do extremely well. This is a wave 1, and ABC correction puts in what likely, in my opinion, is a wave 2 low. they're never going to make a stock like this easy where there's a, a 5% stop that everyone's trading against. If QuantumScape is above 11.25, the length of wave 1, place of the wave 2 low, says that this is all basing, this is all institutional accumulation, and that this is going to explode to 142 for a minimum wave 3 target. I'm going to look crazy talking about waves 4 and 5 to the upside, but this is what close to IPO stocks can do. Okay, they have higher risk and higher reward, because if this is 1, 2, 3, 4, 5 waves, those 5 waves will all become part of a larger degree. Wave 1, we're very early in QuantumScape's, Acromoto's, Li Auto's, and Xpeng's life cycles. If we break above some of these highs, then that's going to confirm, that's, almost over a year of institutional accumulation on these stocks, and we can probably see why. So if we look at Lordstown Motors, this one hasn't gone well, at all. But this is another one I took a half position with. I bought Li Auto and Xpeng in the same kind of process that I was buying these. So, Lordstown Motors was the one that didn't do well, but this is a wave 1, in my opinion. This is an ABC correction. We're below the IPO low. Most traders are going to be afraid to be below these IPO lows. A lot of the biggest winners break below this IPO low. I think for Acromoto right now, what we can do is we can turn on the Ichimoku cloud on the daily chart and say maybe the next time to take a shot at Lordstown Motors is going to be when we break above the Ichimoku cloud on the daily chart. This is the Ichimoku cloud on the daily chart. We'll see, right, that the next time that we break above, maybe 8.32, we're going to see that this is, a massive, trend change right now. That's when we can say that's most likely a wave 2 low. We're beginning a wave 3 to the upside right now. And Acromoto is very, sorry, I keep calling this Acromoto. It's very similar that it's going to move with Acromoto. But I think if it breaks above this wave 1 high in the future, it's very similar to Huya. It's very similar to Ebon, where we're below the IPO low. But if we ever break above the IPO high, that's going to be, confirmation that this is years and, over a year of institutional accumulation on a very small cap stock. We can see what happened to NEO when it broke above this, pre-IPO high, right? Obviously not every stock is going to be NEO, but if we look right now at NEO, this is really what I'm expecting for a lot of, if we look at Huya, if we look at Lordstown Motors, this is kind of what I'm expecting, that, we're kind of below the IPO low right now. Everyone feels, like they're an idiot for buying this. And then what happens? We have this explosive rally. We break above this, IPO high. We begin wave 3, of wave 3. A new life cycle is potentially going to begin. I think Lordstown Motors, Huya, and Ebon, they haven't done well, but if we look at their entire sectors, I think their whole sectors are going to continue to do well. So Lordstown Motors, I'm still bullish on, took a half position, going to continue to hold. Let's talk about some crypto. This is going really well. These cryptocurrencies, they were in my most recent 2 long-term videos, right around these 61.8% retracements. Classical trading, they call this weakness. Wave theory calls this opportunity. Bitcoin, wave 1, wave 2, the length of wave 1, place of the wave 2 low, gives the next target of around 90,000. We'll have a shallow wave 4 correction, go on a wave 5 higher. I mean, Bitcoin, Ethereum's pennies, away from breaking to a new all-time high, confirming that, that's all institutional accumulation. This is all institutional basing. Bitcoin definitely is going to follow Ethereum above this all-time high. This is wave 1 and wave 2. This was a massive bear trap. This was a massive shakeout move. Everyone says they want to hodl Bitcoin, right? And I'm thinking to myself, wow, if everyone hodls Bitcoin, then there's a lot of people on Finchwood who are going to be very rich. But then what happens when it comes time to hodl? Most people, they don't have what it takes. They don't know wave theory. So they sell at the 61.8% retracement. Large institutions have proven that was institutional accumulation, and it's exploding right now into waves 3, 4, and 5 to the upside. So this is why it's called a buy and hold. You can't set a trailing stop on Bitcoin and expect that you're going to wake up with it, in 2026. Okay. But this is wave 1 and wave 2. Bitcoin's going to 90,000, having a shallow wave 4 correction and go on a wave 5 higher. I tweeted about Bitcoin in all caps when it was at 10K, at 30K, I said it's going to 60K, 50K. Right. And then most recently, I said that this was, the opportunity of a lifetime. Looks like that's happening. The length of wave 1, place of the wave 2 low, says Bitcoin's going to 90,000. That's a conservative wave 3 target. We'll have a shallow wave 4 correction, go on a wave 5 higher. Ethereum right now, I mean, every time you look at the Ethereum chart, the price is higher. I think that it's running away right now. This is a wave 1 and a wave 2. We're about to break above this all-time high, confirm this is all institutional accumulation. This is all institutional basing, and that Ethereum, this was a massive bear trap, right? Shake out the weak hands. We're going to go the length of wave 1, place of the wave 2 low. Basically, wave 3 is going to be programmed that we're going to 6,000 the minute we break above, 4,370. The length of wave 1 placed at the wave 2 low says 6,000 is a conservative wave 3 target. We'll have a shallow wave 4 correction, go on a wave 5 higher that will eventually take Ethereum to 8,600. So, buying and holding, right? It has its merits, but you have to actually be able to do it. You can't say, I'm going to hodl Bitcoin, and then sell the next 40% retracement. So here is Litecoin. This was another one. I've talked about playing catch up. I think this is a wave 1 and a wave 2. If we look at Litecoin right now, this wave 2 ended between the 61.8 and 78.6% retracement. It actually ended at exactly the 78.6% retracement. That's why you have to know wave theory. Classical traders, they're going to call this weakness, or worse, the head and shoulders pattern, right? If anytime people are saying, that's the head and shoulders pattern, right, 99% of the time that's going to explode. But this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low. We're going to 500 for Litecoin for a minimum wave 3 target. That's going to be the conservative wave 3 target. We have a shallow wave 4, go on a wave 5 higher. Litecoin, Ethereum, Bitcoin. 2 months ago, 3 months ago, Finchwit was saying, stay away from them, right? I'm getting made fun of for saying Mara's going to 75, right? And then what happens? Bitcoin explodes. Everyone's like, when do you buy it? I'm like, you buy it, when it dips. But most people, they don't have what it takes to do that. So here's Ripple. It forms a wave 1 and has a wave 2 correction. I think Ripple right now is going to the median of this pitchfork. You have to trade crypto as a whole the same way you have to trade the market as a whole. It was really always kind of silly to call for a super crash in crypto before, or not a super crash, but like the major super cycle all-time top that I've been saying for a while was never going to come until Ripple went all the way to the median of this pitchfork at least. So Ripple forms a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low will take Ripple all the way to 3.40 at the very minimum. That's actually going to be conservative. We're going to go all the way to the median of this pitchfork. Ripple's exploding. Bitcoin and Ripple, they're up about 600, 700%, from when I talked about them, but I'm still getting made fun of for EBON, right? Like EBON, me getting made fun of for EBON is like someone who bought tech in the 2000s getting made fun of for yahoo.com. It's like you're just ignoring, Apple, Microsoft, and Google, right? So, Ripple, Bitcoin, they're up 600, 700% from when I talked about them. EBON's been a loser. All right, what do you want? But anyway, this is a wave 1 for EBON. We have an A, B, C correction where the length of wave A placed the wave B high is where wave C is ending right now. I think EBON, is going to turn around, and that's kind of something we can say objectively almost. If we turn on the trend spotter, this is the first time, in a really long time that we've had EBON's trend spotter flip to fully bullish. I think we're putting in a wave 2 low right now. We talk about Bitcoin going to 90,000, eventually 120,000. I think that EBON, some of these crypto mining stocks that we'll talk about are going to play follow the leader. Obviously, they're extremely risky. I mean, some of these stocks are close to $2. Some of these stocks are less than $2. But the crypto mining stocks, I really think that they're going to be the last bus to leave, in the crypto sphere. I think EBON right now is completing, a wave 2 from the IPO high, and it's going to go eventually one day break above this 2020 high and, confirm, yes, this is all institutional accumulation. This is all institutional basing. This is how I view Lordstown Motors. This is how I view Huya right now. Yeah, we've broken below the IPO low. We've still got a lot of upside in my humble opinion. EBON, SOS Limited is another one that's looking pretty damn good. If we look at SOS Limited, it's another one that's extremely risky. I hope I'm not the first person to say that. But this is, kind of what I think could be the last group of crypto derivatives that are going to be a nice opportunity. We see Ethereum and we see even Ripple and Bitcoin all exploding. This is going to be, in my opinion, the last bust that leaves, and it hasn't really left yet. The crypto mining stocks are going to start doing very well. This is a wave 1 and a wave 2 for SOS Limited. On the larger degree, we have another wave 1 and another wave 2. I think this is another wave 1 and another wave 2 that we're ending right now. SOS Limited is going to go on a wave 3 rally to the upside. The stop loss is going to be all the way down at 1.21. So this is another one where most likely position sizing is going to be the only practical form of risk management. But I do think, yeah, that's wave 1, that's wave 2. When Bitcoin's on its rally to 120,000, that SOS Limited is going to replicate that rally that it went on from March to February. That's only a 3-month rally, so we should see an explosive move from SOS Limited at some point in the future. I think the entire crypto market is looking very well. And this is all over crypto. If we look at NCTY, the 9, it's another one. The crypto miners, they're not done. They're really just beginning. And it might be the last big opportunity that is related to crypto right now, especially when we see Ethereum and Bitcoin are running off. For me, this is NCTY, the 9, extremely risky, but it's a wave 1, ABC correction putting in a wave 2 low, and we start to have a little bit of a breakout. If it's above 8.50, the length of wave 1, place of the wave 2 low, says the next wave 3 target is 96. I mean, these are explosive rallies that only take 4 or 5 months, you know, when they happen in 2020 and 2021. So I think that, you know, the crypto mining sector, they're going to play follow the leader, and they're going to be the last big crypto related plays in the market that are opportunities.